Good morning. Welcome to CupO'Forex, and this is your daily video analysis for Tuesday, the 2nd of September. Yesterday, we spoke about the slowing Chinese economic data, as well as the ever-slowing economic situation in Europe. Today, we will discuss economic data out of both the United States and Australia. Let's scroll down to our economic calendar, which is right on our front page towards the bottom. And here we go. Due out any second. Actually, it just broke. The Reserve Bank of Australia has elected to keep the key interest rate the same at 2.5%. So you can see here, this information just broke. So they didn't change the key policy rate, and they are also probably going to stand pat on economic policy as well. What we're going to be listening to over the next hour or so are remarks from the Reserve Bank of Australia. We want to ascertain whether or not they feel the economic situation in Australia is improving or slowing down, and what they feel the future looks like as far as policy. Due out a little bit later on today, out of the United States, is the ISM manufacturing PMI. The previous number came in at 57.10%. We are expecting, as you can see with the consensus number at 56.8, it to slow down a little bit. Do want to point out that other data out of the United States has been showing firming up. We are hoping that the consensus is either met or broken higher. We are going to be watching this data pretty closely, as well as the equity markets like the Standard & Poor's 500 and the New York Stock Exchange for today. The dollar as well will also be impacted by this number. And as we know, the U.S. dollar has been soaring to 7-month highs against all their major currency counterparts like the euro and the yen. Okay, let's take a look at some technical analysis for this morning. Okay, the first chart I'd like to look at today is the Standard & Poor's 500. We have been stalling just above the 2,000 level. This was a key technical level. Everyone had been hoping that we would break, and we broke it. Now we're stalling out. We have a bunch of indecision, as you can see, with dojis forming, and we're butting heads up against a key technical level of 2005.50, 2006.50. We do have support a little bit lower down at 1,990.50 and another support level at 1,985, a little bit lower down. A move above 2006.50 opens up 2015. However, like I said, note the dojis and hesitation as traders are waiting on the economic data to be released today, as well as later on this week with the ADP employment number and the NFP. Also, we have developments coming out of the Ukraine, and that can impact this market as well. Okay, I also want to take a look right now at the euro dollar. As we mentioned yesterday, we continue to fall here. As the EU economy falters and slows towards maybe deflation, the U.S. strength is strengthening, and this is supporting the dollar. Right now, we're just above a key support of 1.31, which is right over here, and a close below that is very bearish. At this point, we need to close back above 1.3250 in this area here to signal a possible reversal and bottom in place. Okay, next I would like to take a look at the Aussie dollar, especially in light of the recent RBA decision. As you can see, we've been stuck in a bit of a range trade pattern here over the last several weeks. And right above the key technical level of 0.9295. However, let's just note the bearish engulfing candlestick pattern which has been forming here at just below another key technical level of 9350. A move below 9310 can target a technical support at 9270. A break above 9370 can target 94. We're going to be listening to the remarks from the RBA a little bit later today, and we should see a little bit more movement out of the Aussie dollar after that happens. If the remarks come in unexpectedly dovish, we could see a bit of strengthening. If they start becoming a little more hawkish, we could see the Aussie dollar continue to fall a little bit. I also want to take a look at light sweet crude oil for today. As expected, this market has broken higher. We are now above a key level of 93.60, pushing towards 95.85 at this point. Any move above 96.50 can open up the key round technical level of 100. We do have near-term support at 93.50, which is a little bit lower down. Actually, we're trading near that right now. Thank you, and have a great day trading. We'll chat again tomorrow.